Happy Friday, everybody. Welcome to your TraderMerlin show. Hope you had a great trading session out there. Just tremendous volatility all around and a lot of indecision on the markets. But for me, all in all, at the end of the week, it was a good one. So I went some top shelf, not really top shelf. I got Glenlivet at 15 today. So for any Scotch connoisseurs out there, cheers. Well, cheers to everybody out there. So let me get a nice sip of this and we'll get things rolling. Oh, that's nice. Okay, it is the 4th of March today, wrapping up what was pretty much a bad week for most of these major market indexes. So I will start there with our trading week wrap up. I'll run through the kind of major market indexes and then go into some of the things that I was involved with today, maybe some of the other pieces that are, I think, facing our market going forward. And of course, if you guys have comments, questions, feedback, send them on in the chat with question marks. If you're watching the recorded version, do it down below the YouTube videos. That's probably the best way to help out this channel as well. Obviously, any sharing, liking, that type of stuff helps out this channel. I see Joe says Monday, Wednesday was doing great, going well, and then Thursday and Friday I gave it all back. Stop losses, my friend. Stop losses. You got to just went past some stop losses there and erased it. And don't feel bad. This has happened to me a million times. I can tell you story after story after story where I've had like a week or 2 weeks of just epic. Like I can't be beaten. There was one time, I think it was 98 or 99 on the trading floor. It was like I couldn't lose. I was just nailing every trade. Boom, money, making money. You know, and you end up the week, you're up like, oh, I'm up $30,000 for the week. And then Friday comes around and you lose $40,000 that day. Like, okay, I was perfect for 5, 10, 15 days, and all of a sudden one bad day of discipline breakdown and violated my stop losses or didn't use stop losses. And if only I knew now, or knew then what I know now, things would be very, very different. Yes, TGIF. All right, let's run through these markets so I can get that out of the way. I'm going to start at the worst and move up to first. It was interesting seeing Bitcoin have such an aggressive down day today. I actually, this is a weekly, I actually expected it to sell off, but not as aggressive as it did today. I kind of still feel like we were going to see some movement back up and challenge this 45,000, but today just gave it up big time, down 6.3% for Bitcoin futures. As you can see, that 45,000 line, I'm going to keep that one there. I'm not bullish on crypto, period, until we get above that line at 45,000. So right now I'm still in bearish camp, even though I have been acquiring some along the way. Bought some Engines, some Atom, Cosmos. What else did I buy? Some Avalanche and some Polygon. But just long term, I'm feeling bullish. But in the intermediate term, short term, looks weak. Who knows what the factors are that are pushing this thing down? But it's just kind of chopping sideways for right now. The good news is it hasn't made new lows and it hasn't gotten to this 30,000 mark, which would be another inflection point for Bitcoin. So that was your worst. And again, when you look at the numbers posted by a lot of these cryptocurrencies, almost double digits. Internet computer, that thing's going to die anyway. That was just one of the big rug pulls, in my opinion, in the industry. You've got a lot of these like FTX, the exchanges. You got Litecoin, Digibyte, Cosmos, Engine. A lot of these ones I just recently purchased, down about 8% today. So ugly. That said, there were a couple that were actually positive, not many. You can see I've got GBTC, which is the derivative of Bitcoin. To me, that's not a proxy. And then you have Gnosis, GNT, doing pretty good, up 23% today. But that's rare to see such gains when everything else is down in the crypto space. So that was the worst. Even for the week, Bitcoin was showing some pretty decent declines overall. Now, let's move up the ladder here. So today, for me, it was a good day, down 1.68% for the Russell 2000. But again, we're still in this big, giant swing range, which is fine, right? I've got a stop that's going to be above this 2100 mark. If we get up there, then yeah, I've got to take my loss or close out this position for small gains. But guys, remember, I've been in this position, my put position here for quite some time, and I need to get out of it by the third week of April, at least, probably earlier than that. So I might even get rid of it here in the next few weeks and roll into a new put position just so I have that time on my side and don't suffer from all the time decay. But Russell 2000 down 1.6, roughly 1.7% today, chopping sideways. Going into the weekend, I certainly would not want to be long going into this weekend because you just don't know what on earth Putin's going to do and how the rest of the situation is going to pan out. So I am still short. I did not take any off the table, kept all of mine, and hopefully we will see rewards for that next week. NASDAQ looking rather similar, down 1.64%. You can see that just 2 days in a row of just nice big red candles. Do we get to that 13,000 mark next week, down to the low 13,000s? I don't know. That's been asked by a few people of me this last 24 hours, but I don't know. You look at the trend right now, and it does look like we had our little rally up here, and now we're going to drift back down and challenge those lows again. So I think next week will be very interesting, and we'll just have to play it by ear and wait and see. S&P 500 was a lot worse earlier on in the day. I was actually pretty excited because I was thinking, man, we're going to end up down 2%, maybe 3% on the S&P. And lo and behold, it has a little pop, rallied up there, and jumps up to just end the day down 0.9%, 4,320. Technically, it looks like just a lot of chop. The good news for anybody who's bullish on the S&P is these lower lows, or these lows on the candles for literally the last week and a half, have been all higher lows except for one. All right, that was today. But all in all, it just looks like chop. Still looking fairly decent. All right. Now, I'm going to keep going. Dow Jones Industrial Average, same thing as the S&P, roughly the same numbers, down 0.66% on the day for the Dow. Well off the session lows, but still just chopping back and forth for about this entire week. Now, we move up the ladder to things that were soaring today. We had gold breaking out above that top zone that I'd drawn. Let me go to a weekly here so we can see a better picture. We had this as an expectation point for this thing to shoot up, and lo and behold, we hit it today at 1980. Right, that was one of the target numbers we specified a few weeks ago with these zones, and we hit that 1980 today, broke above it, and actually closed at the dead high here. So a great breakout for gold. That tells me probably going to continue to the upside here. Now, as far as some of the other positions that I have, which I normally don't talk about because I'm going through the top 7 markets here. Take a look at silver. You guys remember in January 1st when we did our first show of the year for the TraderMerlin show, I said my target for silver is $23.50 for the year. Well, hell, we're only on the 4th of March and I'm already at my target. I might have to revisit this and eyeball some of these big gaps on SLV that have formed. Maybe 25.25 is my next target on this one. But I will probably have my silver taken away. Remember, I sold some calls. Sold those about a week ago. I think it was a week ago. So I've sold some calls, which basically put extra premium in my pocket and said, hey, I'm happy to sell it if it gets to $23.50 because I thought that would be supply and you might have a little hesitation there. But we still have another 2 weeks to go before those options expire. But right now, hey, I'll be happy to let go of my silver shares at this point and buy back, hopefully, at a lower price at some other juncture. And then number one, the one that's just absolutely losing its mind right now, going gangbusters, crude oil, and understandably so, with what's going on over in Russia and the Ukraine. 6.84% pop in crude oil today. And one thing that I'll caution everybody on, when you have these huge moves in commodities, of course, we'll look at the dollar here in a second because I think a lot of it ties to what's going on with the dollar. Also, scarcity and supply chain disruption because things like wheat have gone absolutely crazy. So is crude oil, largely part due to Russia. But for anybody who's trading futures, be very careful. Whatever you do next week, don't max out your account. Don't put all of your. If you've got a $10,000 account, don't buy $10,000 worth of futures next week because you run the risk of them surprise raising the margin requirements. So this can come from multiple sources. So let's say Interactive Brokers. I think Interactive Brokers raised, and a few other brokers have raised their margin requirements that they're charging clients. It can come from the broker, and it can also come from the exchange itself. So if the exchange says, hey, we're going to raise margin requirements for the S&P or wheat or soybeans or corn, all of a sudden those things can pop significantly, and you may be forced to liquidate your position, whether in gain or loss, to cover those margin calls. So be very careful next week. I think this is going to be one of the topics going forward, which is, you've got a ton of volatility. These ATRs in many cases are up over 100% in just the last few weeks to a month for these commodities. And I'll show you some prices here. If you look at things like wheat, of course, is one of the hottest topics right now simply because of Russia. Russia is one of the largest producers of wheat in the world, and now all of a sudden we're cutting them off from everything. Well, that wheat may just dry up and shrivel on the vines. It's not on vines, really. It's stalks. But we've been limit up on the wheat futures. When you see a big move like this and it just stops cold, that's usually a limit up. So we limited up today, yesterday, the day before, 4 days ago. So we've had 4 limit ups out of the last 6 days, and it doesn't look like it's going to stop anytime soon. So be very careful because the ATR in this thing is doubled, maybe even more than doubled, and now all of a sudden you're going to see these exchanges go, you know what, as a risk factor to us, we're going to raise the margin requirements for wheat. You also saw, huge moves in like Palladium and platinum. I mean, metals were just soaring today, loving it. And for those of you who are into the metal space, I know we got Brendan here today. You have palladium smack dab into that high that we saw back from April of last year, or actually April and early May. So, might be a potential shorting opportunity, but look at the long-term chart of palladium here. We are at all-time highs by a long shot. So those of you like myself who drive Toyota 4Runners or Toyota pickup trucks, your catalytic converters have gotten very, very, very become a hot commodity, right? So you might want to set up your security cameras because people like to cut out catalytic converters down here where I live, and maybe that's the case in your area because those things fetch a lot of money because palladium is inside the catalytic converter. Is it platinum or palladium? I think it's palladium is inside the catalytic converter. One of the two. I'm not too good at math. Did I mess up on my math numbers there? All right. I'll read through the chat here in just a second. I want to kind of finish the commodity piece because commodities obviously are going to be impacted by the U.S. dollar. So here's your Dixie for the day. Actually, excuse me, for the week. Monster green candle. I still maintain bullishness on the dollar index. The conundrum that I think a lot of you might find yourself in right now is historically, when you have a rising dollar, commodity prices fall. That's the historical relationship. And the general thinking is most commodities around the world, whether that's corn, wheat, soybeans, crude oil, gold, silver, platinum, palladium, you name it, most likely priced and denominated in US dollars. So if we have the dollar rising, the cost of those goods, those commodities, for anybody in a foreign currency goes up significantly, especially when you have a spike like we did this week in the US dollar. So you're probably thinking, wait a minute, if the dollar is surging like this, shouldn't that have an inverse effect, meaning that gold, silver, platinum, palladium, wheat, and corn are all going to be headed down? Remember, we're running into major supply chain disruptions. Not only do we have issues with inflation as it stands, but when you look at somebody like potentially Russia getting cut off, let's go to wheat, getting cut off from the global trade of wheat, and all of a sudden the world is now potentially out 20% of its normal inventory of wheat, your boxes of Wheaties are going to spike again, right? You're going to see much more of an increase in some of the goods and services, which further exacerbates our inflation situation. So this is going to get real interesting over the next 6 months or so when all of a sudden, we're seeing the cost of these massive spikes in commodities pass on to us. Now, there are some that, have dropped a little bit. Things like lumber has certainly risen, but it's not spiking like some of these other ones. Here is your soybean futures, which you've seen since December of last year, has gone up about 50%. What do I got? I got corn futures also surging. So this is all going to get passed on to us, and it's kind of strange to see those dollars rising as sharply as the commodity prices. And I think that this just reflects supply chain disruption. So supply chain disruption and sanctions on Russia. It will be very interesting going forward. I'm just a little worried that some people might jump on to things like wheat and palladium because of how beautiful those charts look. But boy, I tell you what, you get caught on the wrong side of something that's moving that quick, and all of a sudden they do a margin requirement hike, could be devastating for your account. So be real careful next week with that. I think it's always more prudent to scale back your bets and say, okay, I normally trade 3 contracts, I'll go to 2 or to 1. Even though there's this great volatility and opportunity, it's about risk management. Do you want to make a ton of money right now or potentially lose a ton of money right now, or play it safer and make a ton of money over the rest of your trading career? To me, that's the one. Brendan says, I don't eat wheat. Well, you're lucky. You got gluten issues, right? A lot of people, all the gluten people, the people who have gluten intolerance right now are going, yes, go wheat, go wheat. The black market for Wheaties boxes is going to be awesome. Brendan, you're funny. I was planning to sell my whole portfolio and go all in on crude oil futures. Please don't do that. I mean, you never know. I mean, I still think crude oil's got some legs on it. I mean, the momentum in it right now is fantastic. And I think I saw a comment here from somebody else says, where do you see the top? That was from Margaret. And you asked for a poll. I can do that. Let me create a poll. And you want to know, I can't, with the poll, I can't do a price. Let's see. Let's just do this. Give me a price, Margaret. Like, do you think oil? I'll get to, let's see, right now you're 116. Let's just do 120, all right? Now 120 next week, just for fun. I unfortunately, it'd take me too long to type in all the different variables where you'd have to put in your poll. Or I guess we could answer that one because it's a structured poll. But I guess if we wanted to, Margaret, I could just ask everybody to type in a chat, which we'll probably do after that. Like, once we have those numbers in. I'm just kind of curious. Do you think it will get to 120 this week? And to see the chart, here's where we're at. I mean, we double tapped 116 in the last 2 days. That's pretty damn good. Now 120, where are we at here? Well, I got to skew this chart because that stupid spike down always messes with me. But where's 120 on here? You know, it's really getting back up into this level over here that we haven't seen since 2008. I mean, that's long, long way back. 130, are you choose? Well, what do you mean, what is wrong, Gallo? I mean, nothing's wrong. It just is what it is. I wouldn't say that anything is wrong. The only thing that's wrong, I would say, and I'm not trying to polarize anybody here, would be Putin just unilaterally going into Ukraine and doing what he's doing. I think that that's wrong. But is the price of crude oil wrong? No. Price of crude oil is the price of crude oil. Is the price of Bitcoin wrong? No. Price of Bitcoin is the price of Bitcoin. So never look at it as being right or wrong with regards to assets traded. To me, it's more about people's actions being wrong, not just with Putin, but just in our overall lives. We see people do things you just question and go, "Why are you doing that, man? You don't need to do that. It's unnecessary." Okay, let me see if I got some questions rolling through here because I have been going through. How come my oil producer stock is going the inverse of oil and Nat G? Well, it may depend on which producer you have, right? Because just because oil is moving up does not mean that they're all going to go together. There may be, with that specific oil producer, they may be, who knows, maybe your oil producer company is doing some partnership with China, with Russia, and all of a sudden their business is being impacted and their stock is being crushed. It also depends on where they're extracting the oil from. So there's a lot of other variables. Just because they're an oil exploration company doesn't mean that they're going to surge with oil. They may have limited production capacity and be maxed out, therefore not going to make any more money. You would think that the rising price of oil would benefit them, but there could be a lot of other factors there, and unfortunately I don't know all the little details there behind the scenes, but that's it. Yeah, I'll try to do more polls. The misalignment between commodities and the dollar. Oh, what's wrong there? I don't know if it's necessarily wrong. I think it's just there's this period of time right now where we have kind of an adjustment. Now, even though the dollar is rising, there are some commodities that still tend to do well because it's the rising dollar, as we mentioned in the past, usually indicates weakness for the market. So the stronger that dollar gets, the weaker the U.S. equity market is going to become. Now, when you have that chart of the Dixie index, which looks like this, we had the breakout. Oops, let's make that look normal. You know, you've had that breakout recently. I mean, the trend has been great. The interesting thing is the markets really haven't sold off much during this big increase in the value of the dollar relative to that basket of six other currencies. So here is, you know, the dollar has risen about 10% in value since those lows back in May. Now, if I look at the S&P 500, how much have we fallen since those? I got to go to the SPY because my chart, I'm not going to delete all that artwork there. It was too good. My artwork was great. But if I go to the top, which was, there's January. Let's go back to May. Was I on the right chart? Hold on a second here. I just want to see kind of how far we've sold off. So right now, the S&P off its top is down about 10.2%. The dollar index, I went further back on that one. I went all the way back to this part of May. If you go back to January where this one started, let's go to January. Dollar index is up roughly 5%, 4.5%. Okay, so you got the dollar up 4.5% overall, and our markets are down 10%. So not too bad, but remember this dollar started rallying long before January of this year. It really started rallying, well, I guess back in January of 2021. So there's definitely a lag effect here, but remember, the steeper this goes, the more likely it's going to put pressure on the equity markets to the downside. When that happens, when you have that pressure, there will be a flight to safety. People start to panic, right? Institutions are going, look, the equity markets are rolling over. There's no longer the opportunity or alpha that I need out of the equity markets. Where am I going to go? So you just put yourself in that position, everybody. If you've got, here's the DAX. There's the DAX. So if you have a big pile of cash, and let's say you're an institution, you've got $100 million to invest. Right now, you're probably a little skittish on the equity markets, right? Because the equity markets are looking like this. That doesn't mean they're done. It just means that the gains just have not been there. That trend is no longer as strong. So then you run through your other alternatives, which is let's go to bonds, right? And let's look at, I'm just going to look at like TLT. Well, does TLT look like an attractive purchase at this point? Not really, because we know the bond market's inflated. Plus, you're going to have the Fed cutting back their purchases of bonds and treasuries. So, this could fall even more. And if that does fall, that means that yields should rise. And that trend has also been up. So all these pieces are lining up, which kind of say, well, there is some downward pressure for the equity markets, upward move in the yields of bonds, which means the price of bonds will fall. So if I'm that institution, I have to look at those two assets, equity markets or bonds. Neither one of them looks good to me right now. I don't want to put my money in there because they don't look good. I need to put my money in a place that's going to be growing in value. So maybe I look over at some commodity spaces. And if I'm going to look for a flight to security, I would be looking at gold because that's the historical one. And gold looks way better than the overall equity indexes or the price of bonds. Why? Because it's moving up. So what happens is institutional money will flow into these investment vehicles and move towards gold and silver and other commodities. And I think you saw a lot of that reflected today. I think that a lot of people are looking for the commodity safe haven going into this weekend, and that's why we saw such a nice move in these commodities today. It was just a beautiful day for anybody who's in that commodity space. Let me go look at a couple more of these. So here's your wheat, incredible week for wheat. Natural gas not really doing too much, but still a 4% gain on the day. You had corn looking great for the week. Right, huge up moves. Again, these are a little bit different because they're agricultural commodities, but metals generally tend to be that safe haven. And we saw that, and there's palladium. Here's platinum, which also broke out and is seeking that next level of supply, which is going to be right around 135. You have copper. Copper broke out today. Or actually, yeah, it just broke out today. It tipped it yesterday, but just broke out today. So that's going to go out and seek a new supply zone. And then you have silver, which it broke out of its peak here, but now just challenging this 26 mark for the futures level. So to me, I think you're going to see a lot of this flow into commodities. Now, Brendan is right. Crypto may be one of those as well. Unfortunately, as we speak, if we look at the crypto space, it's not looking so good. To me, the number one that they'll be flowing money into would be things like Bitcoin because of its quote-unquote safe haven. But that chart doesn't look that great either. It looks better than the equity markets because we haven't really made new lows, but it doesn't look as good. But I think you'll see some money pour in there as well. So bottom line to me is it really is about where do you put your money to work to make the most money for you if you're an institution. Remember, your $100,000 or my $200,000 or Brendan's $1 million is nothing for the market. It's where is the $1 billion going, right? That's what is more important. And you have to put yourself in that $1 billion account holder's shoes. They want to make money. And most aren't going to be playing the short side. Most will be playing long-term bullish buy moves, maybe because of some account restrictions or whatever, but it'll be interesting. Russia, largest producer of palladium, new highs. Oh, is it? I didn't know that they were the largest. That would make sense, right? You cut off Russia. See, here's the thing. If that is true, and I don't know, I trust but verify. I trust you, Drew. I trust your numbers there. If they're the highest producer of palladium in the world, and we put all these sanctions on them and they can't sell their palladium, then the available palladium supply that's already here is going to go up in value much more significantly, which would justify a pop like that. But remember, at some point, this is not going to, it's not going to go on forever. And the question is what happens, We could throw some really aggressive hypothesis out there and, does somebody take out Putin and then the whole regime gets replaced and all of a sudden Russia starts to become more democratic and all of a sudden, you usher in a whole new global economy into Russia? That's one option. The other one is they go nuclear and all of a sudden the whole world is disrupted. I mean, there's so many possibilities, which is why I think you're seeing this market fluctuate right now, is we just don't know what on earth is going to happen out of this whole situation. So what are real yields on bonds? You watch a lot of people that are more in that, Brendan. Did you see Grayscale's latest report on a modern portfolio theory? Yep. I knew that they talked about that improving impact to Sharpe ratio significantly. Yes, I did see that. Okay, so that is our quick little rundown here. Not really quick. We're about a half hour into the session already, but I think this sets the stage for some very exciting trading next week. Not just in precious metals, but even for you Forex guys. There were some great trends this week. I was watching the euro here as it broke down below those lows a couple days ago, about 111, right? And all of a sudden, it's as John O'Donnell would say, it's a bug seeking out a windshield. And if you're a daily income trader here, you have some levels it's dropping into right now. And we actually had this 108 level mapped out where I think you guys might remember we said if we get below this 112 mark, then this 108, call it 109, really becomes the next target. And we just smacked on that one. So if anybody here's a Forex guy, your euro might be poised for a bounce, but you're catching that falling knife. Now, are you catching a falling knife if you buy right now on the euro? Yes. But I'm okay catching falling knives if it drops into a pretty decent demand zone. And you notice right here where I've got this level, yes, it rallied up, it sold off, and then ripped out of that zone. So to me, this would be a good buy point for anybody who's looking at going long the euro, but you are going counter trend. It is inherently much higher risk than going with the trend. So you're definitely gambling on this one. However, the probability, in my opinion, is more in your favor because it came right back down to that demand zone. So not too bad. And I'm sure we have some Forex traders out here who are like, what the hell are you doing? You would never do that. Oh, I would. This is one I may actually be looking at buying some of those euro futures. We'll see how the weekend goes on Sunday night. But all in all, it's an ugly chart, but it came right back down to a real strong demand zone. Great. You look at other currencies. Remember, actually next week we have a rate announcement from the euro. That's going to happen on Thursday, so that could be impactful as well. But a lot of breakouts and trend changes, right? Australian dollar double bottomed here 2 weeks ago, and all of a sudden ripping to the upside, made some new highs. We'll see if it challenges 75.40, which is the next target for me. You got the British pound. That one right at a demand zone as well. So there's a lot of great opportunities. The one that you want to stay away from, though, that one right there. That looks pretty bad. This is the ruble. I love that Russian ruble, huh? I wouldn't touch this with anybody's money. Leave that one alone for a while. At some point, it will probably bounce back up, but I think you're going to see tough times for the ruble for quite some time. What else we got? Canadian dollar, that one's not that impressive. Sorry, Brendan and Canadians. My neighbors to the north, your chart doesn't look that great. Swiss franc, we've had these lines drawn for a long time, and it's just traversing sideways. So there are a few that look great and are breaking out, but a few there's always good ones and bad ones in the market. So Aussie dollar, the euro, British pound looking good. Everything else kind of stay away from it. Let's see. Euro, AUD. Oh, yowza. And obviously this has, when we start looking at commodity countries, and Australia being one of those commodity countries, this certainly does have a big impact on non-commodity countries. So like the European Union is not a commodity currency, whereas Australia is, and I think the surge we're seeing in precious metals, which a lot of them are coming from Australia, has certainly helped out their currency. So the inverse here, what you're seeing right now is the euro just losing value, but the Australian dollar gaining significantly in value. So, and that's against the euro, but not as much with the US dollar. Well, you may not look great from an economic or political perspective, but as far as a beautiful country and pretty good people, I'm a fan of Canada. FCX, Freeport-McMoRan, sure. You also have, let's see, what's their name? Not Freeport-McMoRan, Franco-Nevada. They're reporting earnings next week too, so keep your eye on that one. FCX. Oops. So Freeport-McMoRan. A buy point on Freeport-McMoRan. Oh, this one's really tough. I mean, look, obviously they're reaping rewards because if Russia is, in fact, that big of a producer of metals, they're reaping the rewards from this one because you take out some of the major players and just supply centers, then all of a sudden your inventory becomes much more valuable. So where's the buy point in here? That's a brutal one to look at. I really don't know. I probably wouldn't be interested until it got back down to the 41.50 mark, but do you think it's going to get there? I don't know. I don't think so. I don't see anything in here from this rally that started on February 24th. There's no zone that screams at me on the daily. So obviously the next step is to go look at something like a 4-hour time frame. And even there, let me get out of the extended hours. Even there, I don't see anything that looks great as far as a buy point. Maybe the origin of this gap, which of course was the Friday close going into Sunday night, at call it $47. But now I go to the hourly. I mean, does anything look good here? All right, maybe a little better. Let's draw a little yellow box for everyone's amusement. You've got this spot right in here. It's probably the only spot I really see that has a decent demand zone. I know some of you might be looking at this level that's a little bit higher up. There are a few spots you could look at, but there's nothing that's real clean and real strong that just says, wow, this is it. This is the spot to buy. I don't see any of that on Freeport-McMoRan. All right, so 95% of you said we will get oil 120 next week. Yeah, hey, anything's possible. You never know. If this tension continues and Putin does something real stupid, yeah, we could see it even go much higher than that. So be careful. There you go. I think the poll just showed up. 42 votes. I got 72 people, which means that 30 people are just sitting on their hands. You watching Jim Cramer? All right, let me go to one or two questions here. Let's start with this. So here's your economic calendar for today, just to put some numbers on your screen. When we look at what happened with regards to unemployment data, today was a great day, right? Previous number was 4%. They expected it to be 3.9, so a slight decline. We came out at 3.8%. That's great. That is, by anybody's stretch, according to the U.S. government and the Fed, that's full employment. Now, that is well below full employment numbers compared to what they said a couple years ago. Of course, as we've mentioned, it's the active people looking for jobs. There really aren't that many people. It seems like the amount of people looking has just dropped. The participation rate, labor force participation, is getting lower and lower. So those numbers look great on unemployment. What's also really good here was the non-farm employment change. That is a huge increase in the number of jobs. We went from 481,000. They actually expected a decline. We came out at 678,000. In normal market conditions, everybody, this would cause the market to just soar, right? You're going, wow, we got a great economy. It's robust. It's strong. Okay, that certainly looks that way, but that whole thing going on over in Eastern Asia or Western Asia is causing a lot of problems. And I think that uncertainty is going to keep going for some time. All right, more questions. Cramer is the GOAT, huh? The greatest. Jim Cramer is the greatest at picking the wrong things at the wrong time. His track record is impeccable. You want to buy something. If you ever want to buy something that Jim Cramer says to buy, you wait 3 or 4 days after he says buy. So if he comes out on a Monday morning and says buy, buy, watch it. It'll probably pop up Monday. It'll pop up a little bit on Tuesday, and then it'll start to drift back down, and you can buy that thing much cheaper. Because remember, if Jim Cramer is telling you to buy something because of some macro fundamental news, nothing has changed with the company. It's news that will, if it's macroeconomic, you'll start to see the results of that many months down the road. So, gotta love Jim Cramer. I say that very sarcastically. Okay, here is a question came in from KF. I don't know if you're here with us today, KF. I haven't seen you. You've been kind of quiet. He says, what do you think about Ray Dalio? Have you watched his new video in YouTube, Changing World Order? Is it accurate? I have not watched the video. I know his talk track. There's definitely some things it's like everybody. There's some things I like about Ray Dalio. There's others like, I think you're off on that one. But we take it as, you can't take anything that Ray Dalio or any talking head tells you as absolute, right? It helps us formulate an opinion. And I think when you listen to someone like Ray Dalio, if he says, X, Y, and Z, then go and research X, Y, and Z and see if, in fact, those facts and figures make sense and if they work for you. I've seen a lot of people twist facts and details. I've probably done it once or twice in this program as well, and sometimes I'm misinformed, and I can't know everything. Do I like Ray Dalio? Sure. I like most people in the financial space, whether they're good for the markets or bad. There's only one person I hate, and of course that's Sam Seiden. I think he's just an absolute scumbag, but that's besides the point. With Ray Dalio, his belief is you have these regime changes of the world structure and how markets function. The last time we had probably the biggest regime change was 1945 when World War II ended and the U.S., we became it. We dictated what the rules were and what the structure of the world would look like. And of course that was collectively, but that's pretty much what happens. And there's dynasties that last for specific amounts of time. I actually had a diagram last year or 2 years ago where it would show how long different dynasties have lasted, or different eras have lasted. And is the U.S. going to remain the world's reserve currency forever? No, absolutely not. Not forever. Are there things that will change? Sure. The new world order, is it changing? I agree, I believe it is. And that's why I'm such a fan of crypto and digital assets, because I believe that that's one of the major pieces that's going to help this new world shift. I think it's going to be a better place. I think if we look 15, 20 years down the road, I don't think we will have as much reliance on governments. I think we'll be more independent as human entities, regardless of which country we live in, because we control our financial destiny as opposed to having the government and bankers tell us what we can and cannot do. And I think that's part of the new world order. You know, who's going to be the chief of it? Is it going to be the U.S.? Is it going to be Canada, Mexico, China, Russia? Who knows? Hopefully, it's some giant committee that works together for one common goal, which is humanity and making this place a better place. But yeah, I think he is actually rather accurate in his assessment about the changing of new world order and kind of what those steps look like. So in following some of his materials, yes, I do believe so. All right, what else do you guys have for me? The big multinational and NGOs. You guys are funny. I feel like Kramer is shouting out my picks. Hey, if he's yelling your picks, you might want to go the opposite direction. Thanks, Nayama. What else is on your radar, guys? I didn't really have too much to talk about today. I only got 2 questions that came in. I actually could dive a little bit deeper into some of these topics, but didn't really have too much planned other than having a glass of whiskey and getting ready for a great weekend. And the weather's not that nice out here in California, but I'm hoping it's better where you guys are at. As we wrap up here, what do you guys want to, any last minute things you want to go over? While I wait for you guys to type into chat, see if there's anything that was interesting or charts you want to look at or whatever you want to talk about, I will run through real quick your economic calendar for tomorrow or for Monday. I have an economic calendar and an earnings calendar for Monday. Not really much going on in the earnings calendar, I'll be honest. Let's see, does that have an earnings calendar? Nope, I just have an economic calendar. So here's the economic calendar for Monday. For Monday, you have USD, you've got consumer credit. That's pretty much it. It's a quiet day out there. BRC, retail sales numbers for the UK. Other than that, I don't see anything here that's really that noteworthy. Now, let me see. You wanted to see pictures of the bikes, huh? All right, bear with me. Let's see if I can do this one. One of my students in the Crypto Investor Live program did something really cool. He bought this software for me. I think he might even be here, David. He bought this software that allows me to share my screen, and I can show you the pictures. I just have to make sure all the nasty pictures are off when I do this, because I don't want you guys to, be all offended. I'm totally kidding. Bear with me as I bring this one up here. I can show you my screen and share my photos with you. So the bikes, you want to know about the bikes? Here's my, this is like my bike shop. There we go. So these are them. Oh, wow. Totally different. There's my bikes. Let me share the screen with you. These are the ones that I bought. And I bought them because they fold in half. So right here, there's a little hinge. They fold in half. These handlebars fold down, so it goes in a rather compact space. But that's the girls' bike, and then this is the men's bike. So I've got most of mine are these. This is, the blue ones. Sorry for my messy garage, but these are some of the blue ones. And then that's kind of my squad. I've got a few more than that, but this is the look and feel of them. So I've got right now, I think I've got like 9 or 10 in the garage. It's pretty funny. Anyway, thought I'd share that with. There you go. You got to see the bikes. That will do it. Let's get that out of here. Now I can't get to my platform. Cool. What else did I see coming in? We are still waiting for Bitcoin to hit 28,000. 30,000, Joe, I think is their first point we got to look at. And right now, the way it's sold off today, feels like that's where it's headed. So here's your Bitcoin price chart. We're looking real ugly right now. This is an hourly, just falling apart on the hourly. Here's your daily. We are still really in this really big range between 30,000 and 45,000. Now, we haven't actually hit 30,000, but to me, that's where, if this doesn't make new highs, then I think that this trend will continue and will end up drifting down. So, obviously, I don't want it to get to 30,000. If it does, I will be looking to acquire more Bitcoin and other cryptos at the time that I feel would be, deep discounts to present value. Hopefully, it doesn't get there. It's buffing a hood, huh, Chris? Not this hood, right? I got HOD for, there's your Robin Hood. We'll just bring that one up just so people can laugh, since we've been poking fun at this one and just keeps going down and down and down. Since we're on it, let's just go look at some other garbage stocks. Let's go look at some trash. You're going to want to take us GME. There's garbage. So GameStop, unbelievably at $111. Really, I feel like I should be buying some puts on that one as well. And then AMC. There's AMC. Dead in the water, $16. Guys, remember we talked about this thing dropping lower and lower and lower. 16 actually seems like it could be relatively fair value. Remember, back in 2018, AMC was over $20. But when COVID hit, apparently this one thing was worth $72. Pretty crazy. Does that chart look like the S&P? My dog is awesome. He's great. Let's see what else. What would happen if the dollar loses reserve status? If the dollar loses reserve status, you're going to have some of the craziest trading times of your life. It will be absolutely nuts, because what happens is countries will now be free to price commodities in their own currency. And we had some countries trying to price oil and gold, and that was squashed pretty quickly by the U.S. and some other countries, but I think U.S. is the main one there. I think if you end up having a new reserve currency, ideally, it would be something not controlled by a central government. I mean, I would love to see something like Bitcoin as a global reserve currency for the world, because nobody controls it. Of course, that probably won't happen, but nothing is out of the ordinary. I think what will happen is if we unpeg and the U.S. dollar loses reserve status, we have to figure out who would be the one to take over the lead there. That one will give us a better indication of how wild or how damaging things could potentially be. My guess is it would probably be the yuan, the renminbi. I think China is probably next in line saying, hey, we'd like to be that reserve currency, and they will fight for that one. And they're getting stronger GDP, even though I don't trust any of the economic data coming out from China. They seem to be the next contender. The euro is just a mess. I mean, the euro is an experiment in trying to bring together so many different cultures and societies. I don't see that working. I think I told you guys, I was interviewed when I moved to Italy in 2001. I think it was like 2002 or 2001. I was interviewed by a Spanish radio station, and they were saying, Merlin, what do you think about the euro? And I said, from what perspective? As a tourist, the euro is amazing. The euro is epic. Before the euro, I was like James Bond. I had a little accordion file with all these different, here's my Deutschmark and my Drachma and my liras and all these different currencies. Now I got one. So much easier. As someone who lives there, as a citizen, this is awful. Because, I know I'm going to offend some people here, but if you look at German work ethic, it's probably one of the highest in the world. Germans are like work, very structured, systematic, they're go, go, go. Then you go to Italy, and Italy's much more laid back. Yes, they get their job done, but caffè o sigaretta, si. Then you go to Greece, and I know Jerry's here, but the Greeks, they like to, have a sip of ouzo and relax and take it easy. You bring in those two types of cultures and you expect everyone to work at the same level and produce. That ain't going to work over the long haul. That's not going to work, in my opinion. So I don't think the euro would be the reserve currency, so it'd probably be China at that point. I know, Drew, I'm not saying I want it. I'm just saying what is plausible, right? Life isn't about what I want. It's more about, what's coming down the pipeline, what can I anticipate, and if that does happen, we'll have to reevaluate at that point. I don't think it's going to get there. I don't know. Who do we lose to, right? As the old phrase says, you got to be the prettiest girl at the ugly girl dance. I mean, that's like fiat currencies. Right now, we're the prettiest girl at the ugly girl dance. What a horrible analogy. Sorry, ladies, that's offensive, isn't it? How about the you're the prettiest guy at the ugly guy dance? I'd rather offend the men here than the women. Cigarette, hey, ciao, prego. Do you think Bitcoin cycle disrupted since big boys have more interest in it? I don't know if the cycle is disrupted, Serge. I think that it's actually, I think it further bolsters the argument for more Bitcoin upside potential. So I think what you saw back in 2020 was institutions saying, hey, Elon Musk is getting into this space. Hey, Michael Saylor's getting, cornering the market. We'll get some for our balance sheets. And I think with regulatory, with the introduction of Bitcoin futures, it now legitimizes to some extent Bitcoin for institutions like Goldman Sachs, JP Morgan, and all these big firms. So I think now it actually allows them to come into the equation much stronger. And as we get clarity from Gensler and the president with regards to crypto, remember, we're still waiting on the executive order from Biden, which really haven't gotten that yet, with regards to crypto. And once we get more clarity, I think institutions will have access to these markets with greater capital, and then you'll see that next leg come. I still am positive, believe it or not, that we'll see Bitcoin at $100,000 by the end of the year. I mean, we're at 40,000 right now. That means we'd have to see a 150% gain from here. Is that possible? Absolutely. Absolutely. Nayama says, do you use just demand zone, supply zone? How about order flow and the dome and volume profile? No, I don't use those pieces. And here's the main reason why I don't use order book. Okay, order book, level 2 screen. I think someone asked me about this one yesterday. It's the biggest way to bluff and manipulate people in the market. The biggest. Sorry for the podcast, folks. I had to take a sip of this wonderful Glenlivet? Glenfiddich? I forget which one. It's a 15-year. Delicious. If you look at the order book, I think I've told you this before. Back in the late 90s, you go to 98, 99, institutions would sit there with their identity, with their name, and say, hey, I'm buying and I'm selling. They didn't care that people were watching because nobody was using the networks back then. Now, when I got in, retail investors were not using level 2. Then they realized that we're all watching them. And so when Goldman Sachs would come in with an order and jump onto the bid to buy 500,000 shares, I would buy immediately at market and jump in front of him and let Goldman push the price up for me. Easy. It was so easy back then to do. Then all of a sudden Goldman realizes, damn it, all these people, as soon as I place my order, everyone's buying the market in front of me and I'm not getting filled. So now what does Goldman do? He starts using bluff orders and iceberg orders and reserve orders and using share size to manipulate buyers and sellers, right? So for example, if you guys were all buyers and you're looking at the market and you're sitting over there, I've got a limit order, I want to buy at $50, and Brendan's, I want to buy at $49.50, and Tom's, I want to buy at $38, whatever the price may be. If I need the price to go down and I'm Goldman Sachs, I will jump onto the ask with a limit order. I'm going to go out there on the ask and I'm going to scare everybody with a huge, I'll put $1 million in the order book at the top level, meaning all those buyers who are sitting on the bid side are going to go, oh, hell no, I'm getting out of the way. They cancel their orders, price falls dramatically, and I jump in as Goldman Sachs and I buy on the bid side at a much lower price. Don't use level 2. It's a scam. It's a tool for those institutions to bluff and manipulate people. So I am predominantly price chart, supply and demand. I mean, you guys have seen my charts. I don't like to pollute them with all sorts of lines. Now, this one is probably the most polluted chart I've had on this screen for years, right? It's nice head and shoulders, but I'm leaving this here because I still firmly believe that we are headed in the direction of this downtrend. We are showing weakness. Again, we really need to close below 3,200. We have not gotten that yet. If we get it, I'm just going to leave it here for posterity so I can look back and say, all right, I was right on that one. And if I'm wrong, well, I'll know if I'm wrong if we get above 4,600 on the S&P. If we get there, then I'll just erase this whole chart. But I don't like to have all those other indicators. Can they help you? Yes. Certainly looking at order flow, looking at, not order flow, but you can look at volume charts where you can actually look at VWAP, volume weighted average price, to see where transactions are occurring. I think that could be helpful. But I'd rather have a clean, naked chart where I'm not being swayed by what's on it. I'd rather just be swayed by price itself. And, it's worked for me. I would like to bring Stephen Van Meter on. I think he's been doing a lot more social media stuff. I'll see if I can get him back on. He was a lot of fun last time. Merlin, do you think they use chart patterns and levels to manipulate trading behavior? I think yes. I agree. It's pattern recognition. It's group psychology. So one thing I love about patterns is they work until they don't, right? So statistics, you can pull up statistics. There's a book out there by a guy named Bukowski. It's called the Encyclopedia of Chart Patterns. So if you go to Google, so I should be doing this one for you, but if I go here, one second. Let's see. I'll go to BOWSKI, Encyclopedia of Chart Patterns. So you go to here, right? Here's his book, Bukowski, the Encyclopedia of Chart Patterns. And, you can go through here. There's Amazon and all these kind of ones. In many cases, for a lot of books, except when I finally released mine, you can just type .pdf. And in many cases, you can actually find it here and just download that copy if you wanted to do it that way. But, you could buy it and support the gentleman who created this book. But it's got a ton of statistical information on price patterns. I actually have a copy of this book. I did not buy it. It was given to me by a friend. I don't really buy books. But more data. It's really good. It'll go through and explain each of these chart patterns, like head and shoulders, what's the statistical probability of different candlestick patterns, etc. I find that stuff beneficial. But Brendan's right. It's like saying, I know what's going to happen when we get a golden cross, which is where your 50-period moving average crosses above a 200. I know what's going to happen because people have been conditioned to react in a certain way. It's like many aspects of our life, even outside of trading. We are trained to think a specific way, and people who know that can capitalize on it. Unfortunately. All right, what will we be looking at over the weekend to help prepare yourself for next week's trading? I will be looking at this weekend. I'll be going to a concert. I will be going out and having probably some shabu shabu. I'm going to go ride the bikes in the sun. I'm not going to look at the markets at all. Nothing. Zero, zip, zilch, nada. I like to pull up quotes on the crypto because I have a portfolio app on my phone for my crypto portfolio, and I'll look at that. I want to think nothing about the markets. Let it all out. Right now is the end point for the week. I'm not thinking one iota about the markets. Why? Because I can't do anything with futures, Forex, options. You can't do shit. So leave it alone. Declutter your brain. Go and do something that's fun, enjoyable, and relaxing. And then Sunday night, I'll look at the futures market just to see what's going on. But again, I'm really not that stressed because I'm in an options position. I can't do anything until Monday morning. So don't torture yourself by constantly having to be involved in things. You need a break, an outlet, and a release. I've had times where people have met me at the bar. I'm like, hey, let's talk about the market. Nope. No, let's talk about the Golden State Warriors or something else. I don't want to talk about markets. Do you trade crypto on the weekend? Generally, no, but if not that I trade it, but if I find that there's been a real sharp decline, sometimes I have orders sitting in the system. So I'll see if those have been filled. If something does drop aggressively, then maybe I'll look to buy some more on different levels. But for the most part, I'm disconnecting. I want to totally disconnect. With the events the world is going on, though, I assume that every short time trades are suggested. Again, you can't do anything until Sunday night when the futures market's open. So you can at least unplug from right now until Sunday night. So you got yourself, a day and a half where you just don't have to think anything about the markets. Otherwise, it becomes obsessive in my mind. In the end, technical analysis is trader psychology analysis. Yep, as a polytechnical engineer, I say it's not technical. I think it's behavioral analysis, right? Chart patterns to me are behavioral analysis because it's the actions of every buy and sell order has created. Well, let's go to something else. Every buy and sell order has created. Let's go to gold. Has created this shape, right? It's a tattoo gun of all the emotions of all the buyers and sellers, big and small. And it's reflecting that in the price chart. So this just tells me what people are thinking. And again, I'm not right all the time, but if I can use that behavioral analysis, which is this chart, to formulate an opinion and act on that with trades, then I think I'm in a better place. So yes, I would say it's not technical analysis. It's behavioral analysis reflected on price charts. There you go. So yes, Tom, we concur again. All right, I think I'm done. I don't want to make this an hour show. I already went through economic calendar. I've got a little bit of my whiskey left here. So again, cheers, everybody. I hope that you had a good week. Sorry for the couple here that I know had a rough Thursday, Friday session. Let me scroll back up because as a parting note, what do you do in a situation like that? So where was it? Was it Joe? Joe, I hope you're still here. I don't know if you're still here, but if you are, this is for you and anybody else who ends. One thing I don't like as a trader, the worst thing in my mind is to lose on a Friday. Because you could have great Monday, Tuesday, Wednesday, Thursday, but you lose on a Friday, even a small amount, psychologically you carry that in the weekend with you. So generally Fridays, when I was at Real Active, I would scale back and not trade as heavy on a Friday. Now, how do you deal with that? If you know that you did great Monday, Tuesday, Wednesday, but Thursday and Friday you lost, what I would be doing this weekend, Joe and others, is bust out a piece of paper, pull up those price charts, pull up the exact trade scenario and say, what did I do? What happened? Right? I know I didn't plan on losing, but I lost. So let me figure out exactly what happened to cause me to lose. And if you can, there you go, Joe. If you can identify even one little thing, you went, you know what? I screwed up on that one. I shouldn't have done that. Okay. And then you put a Post-it note, stick it on your monitor so you don't make that same mistake tomorrow or on Monday or whenever the next trading day is. That's how you get better, and that's how you avoid having those weeks where you do great and then one day blows out. Well, figure out what that blowout day was. A lot of people will focus on the good days and be like, okay, I made a ton of money. Great. I want to do better there. No, don't. Forget about your winners. You made money. Who cares? Your losses are the ones that killed you, right? Joe, you're not thinking about the three days that you made great money. You're thinking about all the money you lost. So figure out how to fix that. That's your homework for the weekend, is to start to pick apart your tradings and be critical. Joe, if you did something that was just stupid and you got to tell yourself, come on, man, that was stupid. Why did I do that? I'm not going to do it again. And again, I'm not being condescending. Again, you guys know I have this sheet right here of my laws. These are all stupid mistakes I have made over and over and over again. So start your 10 laws, and hopefully that will get you past that. 3 winning days, 2 losing days, and a net losing week. Now, if we can get to 4-1 in a net winning week, even better. Get to 5-5 in a great winning week. Cheers. That's what we're all about. All right. Gallo, this is my first glass. Jeez. Cool. All right, everybody. Hope that helped. Hope you enjoyed it. I always enjoy having you guys here and gals for the show. Thank you for the input. Again, if you have comments, questions, feedback, you can put them down below the YouTube video. That's the best. I've been told by the YouTube pros that that's how you increase your show ratings. I haven't seen too big a spike in my ratings, but it's okay. But you guys can put questions down below. Hit that like button if you enjoyed today's show. If you got subscribe as well. Until then, happy trading, everybody. I will see everybody on Monday afternoon. Take care.